Despite the recent market volatility, our next guest says she has two bullish themes for equities. Carey Hall is head of small and mid-cap strategy, senior U.S. equity strategist at Bank of America Global Research. Good morning to you.
Morning.
You have some bullish ideas in an environment when I think there's a lot of uncertainty out there.
Yeah, I mean, I think for the U.S. equity market right now, obviously multiples and valuations are very expensive. But I think, one reason that could justify higher multiples and be bullish for equities broadly is if we are in a more sustained productivity cycle within the U.S. And if we look at economic measures of labor productivity, or even, an equity measure, if we look at real revenue per worker within the S&P 500, that's finally been increasing after this long period of stagnation. So that could impact, a number of sectors, particularly financials. And, that ties into deregulation, which we think is the other bullish theme. And that's a theme that we don't think is really priced in right now. A lot of the sectors that have the most to gain from deregulation, like financials, are trading at, multiples that don't really reflect this versus sectors like tech that have been largely unregulated.
Here's the question I would weigh, and this goes to the financial sector, for example. So you would think that the capital markets right now should be going gangbusters in this sort of deregulatory environment. You'd see all sorts of interesting investments going on. You'd see IPOs coming to this place. You would see mergers and acquisitions happening. And yet, nada. Everybody says they have some kind of grand pipeline. I don't know if that's even true anymore. And part of that is a function, I think, of two major gating factors to this whole economy breaking out. One is what's going to happen with tariffs, one way or the other, and two, what's going to happen with taxes. Now, so the question is, and maybe we get to the other side of that at the end of 25, maybe.
Right.
But there's also an argument to be made that we will be in some kind of tariff debate battle for the next 4 years.
Right, and I think that's one reason that maybe you will see a bigger pickup in the second half. I think that for M&A IPOs, we have seen a bit of a pickup already. So there is the view that can continue if we do see maybe less than feared on some of the tariffs.
January was a terrible month for mergers and acquisitions.
But in general,
we've
seen a pickup since last year, and it has been some smaller acquisitions. It's been more concentrated in some sectors like healthcare. But, when you look at other sectors and in terms of healthcare and financials, where you do typically see a pickup in M&A under Republican administrations, we do expect as we move through this year that there is potential for a pickup as long as the macro conditions remain supportive.
Are there specific banks you'd buy?
Well, I think, financials overall, obviously some of the big banks have the most to gain from deregulations. They've seen a lot of, legal compliance costs that were added. When we look at just pages of federal regulation, how much they've increased. Right. The financial sector has seen so much more than other sectors. So from a margins and efficiency perspective, the sector has a lot to gain. And, obviously not good for us if we're replaced with robots, but eventually, this could be good for margins. So, overall, that sector ranks well in our work across large and mid caps. Right. But I do think for small caps overall, that is a sector there's a lot of optimism on deregulation. The tough part is, as you've said, this is a size segment that has underperformed because of the uncertainty recently around, tariffs, political uncertainty, and didn't necessarily see, outperformance. Last time we saw deregulation because of, tariff trade war and the manufacturing recession. So small caps are an area that they could benefit, but they're still struggling fundamentally. They're still struggling to get out of the earnings recession that they're in right now.